ECB, by the way, was also this morning kept their or cut their interest rate as expected. We do have the ECB press conference in just a moment as well, or just a few minutes. Let's see what we got here. Initial reaction is mixed. NASDAQ flat, S&P moving slightly higher on this number. Dollar index also slightly higher. 207K. Whoa, look at the advanced GDP number coming in at 2.3%. Wow. Okay, wow. So advanced GDP price index also came in lower. This is good for inflation. Inflation, we want to see that down. So good for inflation. Unemployment claims came in lighter than expected. That is good. It's good for the dollar, right? Let's think about that. Unemployment claims coming in less than expected. Less people filing unemployment. That's positive for the U.S. jobs market. So strength there. A little bit of softness in the GDP number. And then prices coming in lower than expected. Always a good thing for the inflation story. So you have a win for inflation. You have a win for the labor market. And you have a miss here. So I would say that that makes good sense why we got a little bit of a mixed initial reaction here. The dollar index is now trading back towards its 1 hour kind of range, has not made a huge move one way or the other. And stocks are just kind of bouncing back from the sell-off that we saw overnight. London session took the stock market higher initially, then lower on the futures. And then NASDAQ is also positive. Let's take a quick little pulse check here in terms of stocks. We've got NAS up 0.38%. I think that the lower inflation read as well as cool economic growth or GDP number may be in a weird way welcomed for interest rates. Let's take a look at interest rates. Make sure I'm not going crazy on this. I'll give you guys my best cover. You guys always know I give you the best coverage I possibly can, but I got to make sure I don't make mistakes here. Yeah, seems like what is happening here today is the market is taking that as a less inflation outlook. Fed may cut rates still. I think the outlook for now is a cut in June, I believe. That's market forecast. I got to check the Fed Watch tool, but a little bit of coolness in the US 10-year treasuries. I'm happy to see that because I have a long position in TLT. I'd welcome a bigger push to the upside off of lower 10-year yields or lower forecasts for inflation. So a little bit of coolness in the economy, not a horrible thing. Again, this is still a strong economy because you have a strong labor market. You still have GDP growth above 2%. That's pretty good. So you've got good reads, but then it's not too hot. So they might actually get some cooling in inflation. Disinflation is a good thing in this market right now. Disinflation is Bitcoin's best friend right now. Bitcoin is a risk asset. It wants to see economic growth and low inflation. Seems like we still have that story playing out. That is why I continue to stay long Bitcoin. This is a trade that I've been in for some time. Picked it up over here around 92,000. Nice little bump, consolidation. I'm looking for the breakout. If we can close, this is what I'm looking for on Bitcoin, guys. If we can close above this high, I'm going to go ahead and lock more into my trade. I'm going to trail stops on this one if I can. But right now, I'm just giving it some room to jostle around, right? It's not being decisive at this moment, so I'm going to wait. I'm just going to sit through it. I don't mind. As long as we don't break this low. If we break that low, I need to get out of the trade. So that is my risk management on my Bitcoin trade. I am also still long US stocks, the S&P 500. I'm long on this one. Kind of a boring mover the last, well, not boring, I guess it's been pretty volatile. Hit this big drop. I picked it up here and I have a stop loss below those lows. So if it tanks and fails out at this trend line and key level of support, I'm going to get out of there. But both of these trades, you'll see, coincidentally, Bitcoin's getting a strong reading and the S&P 500 is getting a strong reading. So those are why I picked those setups. I'm not just looking at technicals. I always want to make sure that I'm aligning with the fundamentals and the technicals, right? So again, I always make this point, but most traders fixate very heavily on just technical charts. and they go in circles, changing their technical trading strategy, trying to look for one that doesn't fail them. And the reality is, technicals are not a holy grail, just like nothing is, right? What I look for is I look for fundamental trends that are playing out in markets, and then I look for technical entries and stop loss placements and risk management to kind of carry the trade. But I don't trade just because a chart looks good. I trade a good looking chart with a good underlying reason to be bullish or bearish something.
The Edge Finder is the #1 trading tool for 2025. The Edge Finder is constantly scanning for new data and information to give you the advantage when it comes to trading your favorite assets. Easily stay up to date with the latest sentiment, technical, and economic data, all within the Edge Finder. The Edge Finder scores on 12 different metrics to give an overall bullish or bearish bias, so you can have more confidence when you're ready to take a trade. The Edge Finder is a one-time payment, which means all future updates and improvements come 100% free of charge. Start your new year off right and upgrade your trading with the Edge Finder.
Here's an example of one that's not working out so well. Oil has been giving me some struggle here recently. Take a look at oil prices. Looks like I might get stopped on this idea. I bought this pullback here. Really love the technical setup, just not seeing the follow through, and that's going to happen. Nothing is going to work 100% of the time. But if we break this 73 level, that's my cue. Time to exit the trade, take a loss on oil. So I'm watching that one. Silver working very well. I've got a long position or a bullish position on oil. I shorted puts on SLV, the ETF, looking really good here today. So probably going to take a full profit on that one pretty soon, and I'll update you guys inside of the group for those of you who are in our Discord. Russell looking good. Nice little pop here, up 0.8%, and had some good news overnight for U.S. stocks. Tesla, a stock that I own and have bullish positions on, up about 4% here to start the day. Great little pop here. Although revenue and earnings missed, there was some excitement in the AI category of the earnings report. And yeah, I mean, it's a stock that I've held for a number of years off and on. I've traded this one and done a lot of options on it as well. So Tesla looking good. Microsoft not so good. Had a big kind of drop here. Then it rallied. Then it dropped back once more. Trading down 4% pre-market here, around $423 per share. And then the other one, the big winner here, Meta, which I guess it was up more than this. At one point, it was up 5-6%. Now up just 1.6. Still, this stock has been on a rip to the upside here recently. You can see Meta just a major winner here in the recent, DeepSeek sell-off stuff. Meta was a big winner because it just means potentially more competition in the large language model stuff, which is positive for a company like Meta, who could get cheaper prices on AI technologies that they need to run their business. So cheaper costs to them are a net win. So Meta just killing it. This is a company that I wish I owned. I do not wish I owned a lot of Meta. This company is a beast. Look at that chart. That's a beautiful, beautiful upward trend. And again, I'll look for dips. If we get dips on Meta at some point, I will buy some shares. But right now, no opportunity there for me. I know yesterday I saw you made a post about gold. Are you looking to trade gold? Are you in a trade?
Yeah, gold looks like it's, I was looking to trade gold, but it's looking very bullish today, so I don't know if I would get the setup.
Mm-hmm.
I was looking for a breaking retest of the high here. We spoke about this opportunity last week as well, I'm pretty sure. The retest of 27.20. We came very, very close to that level, I believe, on Monday. Just missed it. Now price is looking bullish, and looks like we're probably going to create some new all-time highs here. So gold, although I'm not too upset about missing this trade, because I feel like the real opportunity is actually with silver, because I'm actually expecting silver to follow what gold's doing and probably get back to these highs pretty sooner. So I do think silver's got a lot of catching up to do, and if that's the case, there's a long way to go back to that high. So although gold might be sailing off without me, I feel like between current price and here, there probably will be an opportunity for me to take, and we're seeing some really, really nice momentum. Silver has been quite corrective, so I haven't been looking to trade it, but with this momentum now, things do become very interesting. So maybe some break and retest opportunities could look good maybe next week. But I do expect silver to pick up the pace. So yeah, I was looking at gold still if it comes back down to retest. But I feel like probably silver I'm going to have better luck with. But yeah, I'm bullish on both.
Yeah, I'll brag for a second with one of my silver trades here recently, Miko's. So you mentioned consolidation. I have been loving the consolidation because I did something that I don't want to go into too much detail, but I shorted a put on silver. The ETF that I trade is SLV. So what I did is I shorted a put at this level here of support that I liked. And I said, if it goes there, I buy it. And what the market did is just go sideways for quite some time and is now pushing to the upside. But the cool thing here is because I shorted that put, all I'm saying with a short put is like, oh, I'll buy the shares if it comes down here. And in exchange for making that promise, I got paid about $1,250 on that position. So even though the market went sideways and is now moving up, during this sideways motion, that put actually lost value. And because I'm shorting the put, that's good, right? The put running out of time is a good thing when you're short the put. So kind of a nuanced way to play silver, but I've been shorting, cash secured puts on silver for years now. It's one of my favorite plays. But yeah, I mean, I like the movement here. It seems like you're finally starting to get some momentum coming in for silver. And I actually greatly agree with you that if there's going to be a metals run, a real metals run is always through history, I guess not always, but most of the time is led by a push in silver. So if you're really bullish in gold this year, you may want to consider or just look into what is silver doing alongside it, because you might actually, here's a good day for gold, right? Up 0.9%. Here's a day for silver. That is also a good day. It's almost 1.7%. That is a big percentage move for a commodity to have in one day. So, all different ways to play stuff, but I like the metal bullishness. The charts look great. I mean, gold right up to that all-time high. I love trading that kind of environment. All-time highs, sometimes they're hard to find entries, but I like the follow through that you often get. Like an all-time high breaks out and then it's like, oh, that thing just wants to keep going as new buyers kind of flood into it. So yeah, I mean, we'll see what happens there. What about the dollar? Dollar index just sitting here at support, not moved a whole lot in recent days. Do you have an opinion on the dollar? I mean, obviously, if you want metals to make some good pushes, you probably want a weaker dollar, but do you see weakness for the dollar coming, or are you more kind of just neutral or even bullish? What do you think?
Yeah, with the DXY, things have been looking a little bit choppy. I mean, overall on the higher time frames, which is kind of where I get my long-term bias from, I've said since the start of the year, as long as price stays above the high here, I will retain a bullish bias. If it breaks below, I'll be bearish again. Reason being, because this is kind of like our 2-year range for the dollar. We've been fluctuating up and down. And then towards the end of last year / the beginning of this year, we got the breakout. So I wonder, is price actually looking to break back underneath? And we are looking bearish the past few days here. So of course, if that continues, that will help out silver and gold to the upside. And if things continue and we do start breaking through support here, I will look to change that bias and long term be pretty bearish on the dollar, and look to kind of change my bias on euro and pound and other USD pairs as well. So with the DXY, I'm kind of just waiting to see what we do at support, because if we do bounce here, I will keep my bullish bias and look to see if I can maybe short euro or pound. But if we do break through, I will be pretty bearish. And that really does stem from just that higher time frame overview of what we're doing with this range, because if we do stay above it, there's a pretty good chance we do make our way back to the high there. If we do come crashing back down, then we probably will see a full swing back to 101, 100 pretty much. But either way, there's a big move to be had here. But yeah, currently very bearish, and we'll see what we do at support, and I'll make my mind up for the week.
I love that. I love that weekly chart, Miko, because I actually want to ask you about that. So we've got the dollar index at a weekly level of support, as you've just shown on your screen. Big key area. And you mentioned, of course, for audience members who are not, maybe used to your show, Miko is exclusively a technical trader. And the power of that I always kind of point out about purely technical traders. I am not a purely technical trader, but this is one thing that I really like about it, is that they don't have that fundamental filter that I do, which I love that fundamental filter, but what's great, the positive to not having that is you can turn on a dime and be bullish or bearish something just because momentum has cracked the other way. So, but my question to you, Miko, is okay, big level of support coming in to be tested here on the dollar, right? I'm just going to mirror your chart idea. If we start breaking, and we do have a larger scale, and by the way, we saw this under the previous Trump administration, the dollar index proceeded in the first kind of year of his administration to actually go bearish for some time. Let's just say, leaving fundamentals at the door, let's just say we break that level of support as you're talking about. How would you look to play that? And specifically, like, obviously you just mentioned liking the idea of a silver upside on that kind of move. That would be a great environment for silver, would be a fall in the dollar for a few months. Most likely that's going to be a real strong move for silver and gold. But what about on the currency front? Would you, of course, when you're trading currency pairs, you have a decision to make. You can choose which currency you trade against another currency. So if you see that breakout to the downside and we start to get some weakness in the dollar truly forming, what would be your pick? Like, what would you trade? The pound? Would you trade the euro? Obviously to the upside against the dollar in that environment, but walk us through. Would you look at the Australian dollar? What's your favorite kind of pick of the litter, if you will?
Yeah, so I would say the euro, and because euro USD and the DXY are, of course, very, very correlated. So when I can kind of see a clear bias or a clear setup on the DXY, I instantly go over to the euro because that normally mirrors it pretty much in the opposite direction most of the time. So with euro USD, and this is the weekly chart for euro as well, it's pretty much doing the same thing as well. There's a really strong level of weekly support right here, turn resistance. If we see the dollar break underneath that level, we'll probably see euro break above this level. So I'm pretty much looking for opportunities. Of course, pound USD probably do something similar as well. In terms just of the synchronicity between those two markets, euro probably give me some really nice setups if we do break above this area. And then, of course, with euro, I'm looking for something similar as well. If we do break above this area here, euro's been in a 2-year range pretty much as well. Could be talking about a really big move back to 1.1 in the long term. Of course, a lot has to happen for us to get there, but just in terms of pure technicals and support resistance, if we are not getting the breakout here and this is a fake out, euro's probably got a good chance to see a move in the opposite direction as well. So yeah, I'll probably look at euro most. I'll be looking at pretty much all USD pairs because my plan is to take the best trade possible, and if dollar's gonna be weak, there's a good chance Aussie dollars are going to push up, euro's going to push up, New Zealand. So I'll pick the better one, but most of the time it is euro USD. So yeah.
Okay. Yeah, no, that makes sense. I think I would say for me with the euro, the path of least resistance, at least right now, is continued downside overall. But to your point there, if you do get some more kind of surprise in the dollar that weakens it, the reversal could be pretty violent, especially if you get like the chart level that I see here, 1.06 for euro. If you get a break above that, I think what you're going to start seeing is some major short unwinding on this currency pair. I mean, this has been a very popular downtrend for institutional money. And I find this so fascinating because this is where I think we cross over the most, Miko, in terms of like, if I'm like the fundamental super guy and you're the technical super guy, sentiment is somewhere in the middle. Sentiment is a mix of like looking at, because when you're a technical trader, you're looking at charts and trying to decipher psychology of the markets. Well, sentiment is doing the same thing. If we take a look at, like, for example, retail sentiment for a lot of these currency pairs, I was looking at this shortly before you joined. What we've got here is we've got a lot of retail money kind of focused on shorting the US dollar at this time. And they've been doing so for a long time. So this has obviously been a very painful trade for retail, is trying to fight that dollar before it flips. And I'll tell you this, I want to just like clip this and come back to this at some point when you and I discuss it. But when you get a major dollar sell-off, this is all going to flip. That's my prediction. Is what's going to happen is all the retail traders are then going to abandon their dollar short idea and start betting on the long side of the dollar. And that will be a great signal, in my opinion, that the new dollar trend may have actually started. So I'm waiting for that. I mean, this sentiment stuff is something I pay close attention to all the time, is because, what I'd like to see if I'm going to really start getting bearish on the dollar would be look at your chart levels like 1.06. Let's get something like this happening, and let's go double check that same chart that we just looked at. And if that has changed colors around, then that to me would be an excellent signal that, hey, look, a new trend has started truly, and retail money is yet again poised to be on the wrong side of it. That is just day in, day out what we see. We can also, of course, go deeper. We can look at something I've been finding really interesting, which is actually, let's look at COT data history. For those who look at this stuff, this is fun, because what you see is this yellow line is institutional net positioning has been rising on the dollar here recently. So, you know, I look at dollar bearishness a little skeptically, as you do as well. You know, that key level, let's see, like prove it a little bit. But right now, institutional money still seems to be kind of flowing in the direction of dollar bullishness, and retail money seems to be still flowing in the direction of fighting the dollar uptrend. So at some point it will change. Institutional money has made a lot of money betting against, you know, or betting in favor of the US dollar. So we'll see. But I think that's something that we regularly check in on, and just like how Bitcoin eventually started finally making those big kind of breakout moves, eventually the dollar will crack the other way. But I think it's one of those things. Dollar index to me looks innocent till proven guilty, right? You got a key level support here. We're in an uptrend. We'll see if it can hold.
Quite happy to go into euro dollar shorts, but I am starting to consider, where do I want to start looking to go long? Because I think it's a little bit early at the moment. I don't think we're quite ready really for a reversal on euro dollar. I mean, the data just doesn't support that. But I think I'd be quite happy to start positioning to the long side of parity, and very slowly building up very small positions and just buying up euro dollar while it's cheap. Even if the economics are against me, I can day trade euro dollar shorts, and I can start building a long position over some time, positioning obviously for the long term. So I'm considering it. I'm obviously not doing anything yet regarding that, but it's just something I'm thinking about. Surge. That is my opinion on EU. I think we're still heading to the downside. The seasonality generally, overall, with the euro and the dollar is very strong until around March, and the euro is very weak until around March as well. The ECB sounded as if they're going to be continuing to cut rates. It was a unanimous decision to cut rates this time. They didn't really give much signals to change that perspective. They also said the wages are expected to continue to decline along with services. So yeah, generally speaking, the euro is still not in a great spot. We also had pretty poor data for Germany this morning as well. The US dollar, I would say that one is continuing to be bullish in my view. Don't really see any concern there, to be perfectly honest with you. It is early to buy EU. That's what I'm saying. I'm not doing anything yet. Just waiting. Godfrey, thank you. Good to see you. Manu, mood off. Not sure what you mean, but yeah. So I'm currently in a Nasdaq long. I'm still in dollar Swiss longs. New Zealand US dollar long is hanging on barely, and the pound dollar shorts are back to entry. So yeah, there's nothing going on really for me. I've closed out fully of all my CFD positions. So my euro pounds are completely closed out. My euro dollars completely closed out. So yeah, I'm just waiting for the full transition now. I don't like where it is at the moment. It's just a little bit too high. I'd love to have, or love to see, a deeper pullback, possibly to this previous low. So this is around 43,900, 44,000, I'd say. So long position off here, back into the previous highs. Stop loss just below the structure, so something like this. We get a relatively good 1 to 3, I think. But I think I'm being a little bit optimistic, really thinking that we're going to have this large pullback. So if we don't get that, then there is nothing I can do in this market, unfortunately. Let's see what else there is. There's Bitcoin. I don't trade Bitcoin though. Same with platinum. Oil's bullish. We've just looked at oil. However, oil and dollar CAD both been bullish tells me I don't want to be in both of these trades. So I'm quite happy to take either an oil long or a US dollar CAD long. Taking both of them, I don't think is the best idea. Because obviously oil and the Canadian dollar are heavily correlated. FTSE, I don't trade the FTSE. What else do we have? New Zealand, US dollar. It seems like the dollar pairs are back on shorts. Euro dollar's back, pound dollar's back, New Zealand, US dollars here. Yeah, I still like dollar cross shorts, and the yen. I've been saying that I think I might have missed a little opportunity on the yen pairs actually. So I've been really disregarding them over the past couple of weeks just because I don't like the yen. However, it has actually presented some really good opportunities, and it has been pretty strong relative to G10 currencies. So I would actually quite like to just test the waters with a short, probably on euro yen, actually not pound yen. So with the pound, I'm a little bit neutral in terms of direction, whereas the euro, I am still more on the bearish side. So I would quite like to go short. I mean, there's two options, really. We've either got a rejection, lower high, continuation to the downside, or we've got the break, the retest, and then the continuation. So depending on which one we get, I'll either enter on the pullback or I'll enter on the retest. So we will have to see. In terms of targets, I think down here is quite reasonable at the previous low towards 156.5. I would lean more towards this first option of having a rejection and a lower high get printed. And the reason is because we've already got a oversold RSI. We're at the bottom of the Bollinger Band. We're at quite a strong H4 level of support. So as far as I'm concerned, rejection from here, lower high, and then continuation seems like the most likely situation. However, obviously, we'll have to see how this market goes. But yeah, I think that's likely how I'm going to approach this one. The euro went up despite the rate. So the rate cut was already priced in. It wasn't a surprise. It's been heavily expected that they were going to cut rates. The reason it went up and then went back down is because Lagarde sounded quite hawkish at first. It sounded relatively positive about the data and the situation. Then she moved on, and it actually sounded quite dovish. So she didn't say, but it was quite obvious that she was basically saying that they're going to cut rates again. She was saying that wages are very likely to come down. Services are also likely to come down. So yeah, it wasn't very, it wasn't great in terms of giving the euro strength. So that's why the euro went up and then went down. He finally wants the yen. I do. I'm a little bit late to the yen party, to be honest. I was a bit too stubborn on that one. But yeah, I think I might be changing my tune a little bit. Godfrey, the yen strength, it seems to be coming from the rate hike and a little bit of optimism around the yen. But to be honest, I still don't think it's a good currency to buy long term. I think further weakness is inevitable. But if you want to catch some short-term momentum, it might not be the worst option. Let's refrain from using support and resistance. No. Because that is what brokers teach you to keep you losing. Close your eyes. Ball out, that's just not true. I know we agree and disagree on a lot of different things, but I'm going to have to just disagree with you on this one. The reason things work and don't work in the markets is because you have the self-fulfilling prophecy and you have herd mentality. So it doesn't matter what it is. Powell could come out and just talk about bananas for the whole FOMC, but if every single institution, everyone says that's bullish, the market will be bullish, even though it's not fundamentally anything related to the markets at all. It's the same with support, resistance, Fibonacci's, moving averages, trend lines. It depends how many people are using it. I can show you examples now of Citibank using support and resistance and moving averages. I can show you one of Pickett Institution using moving averages and oscillators, supports, resistance, trend lines. It's completely fine if you don't want to use it, but don't say it's a trap, because it's not. No, brokers don't actually teach you anything. Anyway. Yeah, ball out, that's the point though. If it's herd mentality, it doesn't matter if you like it or not, because as long as the herd's following it, it's going to work. That's why you look at the monthly, the weekly timeframes, you'll see a very simple rejection of previous low or a support, because there's so many people, so much liquidity and funding looking at the same level. That's just how it is. And you can't deny it, because that is literally how the markets work. The markets wouldn't work if no one agreed on anything. You have to have buying and selling interest at the same levels, otherwise it's just going to be range bound. Ball out, you're not. I'm not trying to get into an argument. This is the last thing I'm going to say about it, but I'm going to show you I'm going to show you something here, because I got into a similar situation with someone else. Yeah, right here. So there was this guy saying he trades like the banks. He teaches you, you know, his bio says trader mentor, teaching you real institutional trading. Bearing in mind, he says, retail look at moving averages. When this is a Citibank document, they've taken a short position because of a resistance and a trend channel and a moving average. This is another institution that uses trend lines, Fibonacci, oscillators. And this is obviously just a MUFG report talking about macroeconomics. I know you're not talking about that specifically, but either way. So that's my last point. We're going to move on. I like Ballo. I think he's got his own opinions, which is good. You don't want people to say and always agree with you, but in this situation, I don't agree. Anyway, let's keep this gravy train going. So yeah, Euro's not doing much off the back of the ECB conference or release. Their statement wasn't really very interesting. The same with FOMC, actually. There was not really much going on. It's very dependent really on what inflation is going to come out as in the US. So lower inflation will lead likely to more rate cuts. Higher inflation will lead more towards a rate hold narrative. So we'll have to pay attention to what's going on with US inflation. Europe, I would say, is still pretty doomed, to be honest. We're going to have to just keep an eye on the general economy with Europe. The pound is in a tricky spot. I'd say it's definitely found some support. It's definitely doing a little bit better than it was, although it's still not necessarily something I'd want to buy and hold. New Zealand dollar, Australian dollar, I would also say are in a pretty rough spot. Yen and US dollar, to be honest, the only things I'd really be interested in getting into in terms of long side.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.